Hey guys, this is Tian from Engineered Money here to bring you another video. Today we're going to talk about inflation, why is it so high right now, and what can we do as investors to make lots of money during periods of high inflation like right now. So first off, just a brief note for our viewers, inflation simply means that every year, every period of time, over time, money becomes worth less and less. And in that sense, it means I can buy less and less goods and services. The reason why there is typically a steady amount of inflation is because inflation incentivizes people like you and me to spend their money and use it to purchase goods and services to get the economy going. Now, if you've been paying attention to prices in the past year or two, you'll notice that things are not as cheap as they used to be. Inflation has been hitting us quite a bit. The reason why things are more expensive, and what I mean by that is stuff like food, shelter, like houses, cars, anything like that, they're more expensive because inflation has gotten really bad. And inflation has gotten really bad for one key reason, and that is because of COVID. Now, I understand not all of us live in the same place, in the same country, with the same government system, but a very common response to COVID across the world is, one, locking things down and preventing people from working and therefore producing goods/services. And this is to avoid the spread of the COVID disease. Two, printing a large amount of money so that this money can be distributed over to all the people who may need that money to continue surviving. The government has decided that people needed to stay away from work, they needed to get locked down. But that is a bit unfair because how are they supposed to make a living? Well, the government assists with that by providing them money. And how do they get that money? They simply print more money. The reason behind the government doing shutdowns is well understood. It's because they want to kind of lower the amount of people spreading COVID and therefore lowering the amount of stress on the health system in any given government. And that is a good thing because it means less deaths. But it also has some side effects to the economy that we need to think about. There is two main things that occurs here. One is the lockdown causes people to no longer be working. Some amount of people are now no longer working because it's not safe to be near people. So this can be simply not working at all, or it can be lower numbers of people working. And this is maybe because of social distancing. Previously, my office building could support 1,000 people. If you have to social distance everyone, maybe it only supports 250 people and everyone else works home. And a lot of jobs out there that do produce goods and or services, they cannot be done at home, and therefore they cannot be done at all if the government shuts them down. So what does that mean is there is a lowered amount of productivity in the country. What else does this mean? Well, not only is there a lowered amount of productivity, but the government is also giving everyone money by printing more money. So there's more money in circulation, but less goods and services available to buy. If anyone's familiar with general Econ 101 supply and demand graphs, you'll realize that as the amount of productivity decreases, there's less goods and services, so there's less supply. But the demand is still the same because people still want those goods and services. Maybe I'm oversimplifying things, but essentially what this means is there's going to be a higher price, right? We settle on a higher price because there's less goods and services, but more money in circulation. This is really dangerous for folks who actually hold a bunch of wealth and money because that money that you hold is still the same amount of money. Let's say I'm holding $1,000 in the bank. That's still $1,000 if I don't invest it. But if the government prints more money and locks the economy down so that there's less goods and services, the buying power of my money is getting shrunken very quickly. It looks like I still have $1,000, but all of a sudden everyone else has more money and they can spend it, but there's less stuff to buy, so they're willing to pay more, and all of a sudden I cannot buy what I wanted to buy with $1,000. It's just gotten a lot weaker. To make matters worse, not only is there so much money being printed, but there's also record low interest rates. And what that means is you can borrow money for a cheap price, so cheap that it's essentially unprecedented. And this can be really dangerous for prices as well, because all of a sudden I have the ability to not only buy things that are low in supply but high in demand, but I can also leverage myself to further sweeten the pot to get someone to sell their item to me. And this is the reason why we see things like housing bubbles, stock bubbles in the tech industry, right? There is a lot of money going around. Have you seen cryptocurrency in 2020 to 2021? The prices have gone up exponentially. And this is all because of these factors, right? There's a lot of money being printed, there is very little supply, and I'm able to leverage myself very, very cheaply because the interest rate is just so low. I don't have to pay so much into whatever interest rate I'm borrowing from. It's all principal essentially. So why would I not just borrow all this money and buy myself lots of assets so that I can hold them into the future? All right, I think it's time to talk about how to make money in a high inflation situation like this. And the TLDR of it is, it's pretty simple. You just buy assets. And because there's so much inflation, your assets will be worth a lot, and therefore you will have more net worth. The careful thing to think about here is just because you have more net worth doesn't mean you have more buying power, because everything you want to buy, if you were to sell your assets, is also increased in price, but it at the very least beats out having cash and just losing the value and buying power altogether. So it's always good to have it in assets. But not only should you have it in assets, all the rules of smart investing still needs to apply. Is it a good idea to buy certain companies? Is it a good idea to get certain houses? All those things still apply, and you should still follow them because they continue to help you make good investment decisions. Okay, so going over the first thing that you can buy, it's real estate. Real estate is a great buy for investments. You always hear people say, buy a house, it's a great investment. And that is because it's true. If you were to buy a house, it is a great investment. And it's a great investment because you get to leverage low interest rates in order to buy an asset that you would not have been able to afford otherwise. So any gains to it means more gains to your net worth, leverage. Now, the downside is if that housing price decreases, you also lose a lot more money as a result of that leverage. But as I explained earlier, thanks to this double whammy of higher amounts of money in circulation and lower productivity, we have lots of inflation, and that means chances are assets are growing in value rather than shrinking, making it much less risky than normal. So if you were to put down $100,000 in cash, but you're able to borrow another $900,000, then now you have $1 million of asset and $900,000 of debt, which means you still have $100,000 of wealth total. But a 1% increase in your $1 million house is 10 times more money increase than a 1% increase on your standard principal $100,000. So if I were to invest that $100,000 all in cash and bought it into some stock and it went up by 1%, then I get $1,000. But if I took that $100,000 of cash, I leveraged it to buy this $1 million real estate and it went up by 1%, I get 10 times as much money, $10,000. In addition to the value increases of your real estate, you can also benefit from it by renting it out. If I was paying a mortgage of $2,000 a month, but I was able to rent out my home for $1,500 a month, then I'm only paying $500 a month, but getting $2,000 a month worth of equity. That means my wealth is increasing by $1,500 a month more than if I wasn't doing this. Now, I can also increase it by simply living in it, which means that I'm no longer paying rent and I'm paying all the equity down. So I'm simply gaining more equity because it's not getting lost by paying rent. The downside to investing in real estate, and you may find this hard to believe because of all the crazy housing prices, but the downside is that it typically doesn't return as much money in terms of percentage as stocks. Like if I were to buy some stocks from the S&P 500 index fund, and I just have this index fund holding for many, many years, that fund I have will increase by a much greater percentage than my house. Also, in addition to that, just like how I can leverage myself to buy a house using mortgage, I can also go and take out margin and leverage myself as well, and even leverage myself through options or something to get more money off of my investment in my index funds or whatever stock I wanted to buy. So with that said, renting isn't necessarily always a bad thing because you have to worry about opportunity cost. With that, let's segue ourselves into talking about stocks. In times of high inflation, I love to buy stocks. Why? Because stocks represent a small piece of the pie of some money-making corporation, some body that makes money, and I'm entitled to some form of, no matter how small or how large it is, some form of control to those profits of the entity. If I buy all the shares of Apple, I own Apple. and therefore I'm entitled to all the profits. If I buy 50% of the shares, I get 50% of that, and whatever percent, so on and so forth. And this is great because when you find yourself in times of high inflation, the goods and services being produced are worth a lot more. And that means the amount of money being made by companies that are not affected in their productivity will also skyrocket as a result. For me, that means a lot of tech companies. A lot of companies that, you can work from home and still be able to create all the necessary products that you need to build without losing any of that efficiency or productivity, and therefore getting more money thanks to the higher pool of money in the system. So I love tech stocks, and in times of high inflation like now, where it's caused by pandemic, tech stocks are a great investment. And I will continue to invest in tech stocks so long as that's the case. So just like how housing can give value to the investor by allowing you to be able to either live in it or rent it out in order to help you get more equity and therefore more wealth, stocks have two ways of delivering value to the investor as well. The first thing is dividends. Dividends means that whatever profits are generated by the corporation, based on the amount of stock you have, you're entitled to some of that, and therefore you get money just handed to you by holding the stock. The second form is very similar to dividends, but is delivered in a different way, and it is stock buybacks. Stock buybacks is a scenario where the company that you own the stock for, instead of giving out the money directly, what they do instead is they take out stocks from circulation, which means that the same market cap of the company is now distributed to less numbers of stocks. And what that means is your stock value will increase proportionally. If a company had X amount of money and they were to deliver it through dividends or through stock buybacks, you're not really going to see much of a difference. But what you should know is that stock buybacks are very popular because it gives a company more flexibility in how much money they hand out to their investors. Thanks to this high inflation, I decided to go and buy myself lots and lots of stocks that have their productivity not tied necessarily to COVID. These would be companies that are mainly software as a service companies and payment companies and just technology companies as a whole. Like, there's a lot of picks out there that their productivity is not affected by COVID, but thanks to the inflation, they get to benefit from much higher prices and valuations. So you just buy those and you hold them, and as long as inflation keeps going and their productivity is increasing at a normal rate, you stand to gain a lot of money. All right, since I'm talking about money, let's segue to the final investment that I like to buy during periods of high inflation, and that is cryptocurrency. Cryptocurrency is probably the hardest of this bunch to explain in an easy manner because there's just so many different types and it's so tied to technology. What's great about many cryptocurrencies is that unlike fiat, where the government can print out lots and lots of money and distribute it to people, many cryptocurrencies do not have that capability, and they even have a sort of scarcity to it. One of the best examples of this would be Bitcoin. Bitcoin is a scarce coin, and therefore you cannot inflate it by creating lots and lots and lots of Bitcoins. Every new Bitcoin is harder to get than the last. Over time, you will essentially hit an asymptote where you will not get any more, and at that point, that's it. This is really great in times of high inflation because as the value of the dollar decreases, if Bitcoin just stays the same in value, then what really happens is, okay, you gain more value in terms of fiat as a trade. The reason why Bitcoin increases so much is because so much money was printed and not so much Bitcoin was minted. It's as easy as that. Well, there's a lot more complexities to it, but that's really all I want to cover on that topic. There's also lots of cryptocurrencies that allow you to get a good amount of interest by providing liquidity. Certain folks, maybe they want to swap one coin for another, and if you're able to provide some of that liquidity by offering up your coins, then you can make a good amount of interest from it. The analogy here is kind of like Forex, right? If I have a US dollar and I want to turn it into a euro, some bank out there has a lot of euros and has a lot of US dollars, and every time someone wants to convert a US dollar to a euro, then they take some of their euro money, they hand it over to the customer, and they get to keep a bit of that value. And then whenever a European customer wants some USD, they do the opposite and they get to keep some again, and they just keep taking a percentage of it every time someone makes a transaction. And this is very similar to that, is you're offering your liquidity and therefore you get to get some of that back. That is a great way to make consistent money because cryptocurrency, if it's not being printed out as quickly as regular money, money means that it's not as inflationary. Many times it's not inflationary at all. And if you're able to gain an interest rate off of it, whether it's staking, whatever it is, like there's so many companies out there doing all sorts of crazy things. I don't want to get into it. I have videos on this channel that you can watch if you want to learn more about that. But there is so much of this that you can take part in and therefore get lots of money back, right? And as long as inflation stays strong, you don't have to worry about the values tanking. Sure, just like with stocks, just like with housing, just like with any asset, there's ups and downs. One day it can go up a lot, one day it can go down a lot. And especially with cryptocurrencies, it is probably the most volatile between these three things I'm talking about now, between stocks and housing and cryptocurrency. But that is also where you get a lot of the gains, right? With great risk comes great reward. This is true in basically all manners of investing. The more risk appetite you have, the more you stand to gain for reward, but you also have to be ready to lose that amount of money as well. There's nothing that represents that ideology more than cryptocurrency. So there you have it, folks. In times of high inflation, what I like to do is buy real estate, buy stocks, buy cryptocurrency, and that allows me to maintain my buying power. This has been another episode of Engineered Money. Thanks for watching. If you like this video, press the like button down below and subscribe. Also comment if you have any questions, and I'll see you next time.